What's going on, guys? We're going to cover a little technical analysis on the Nasdaq 100 futures. What we're looking at here is the daily chart. Now, before I go on with the video, if you guys could do me a huge favor, make sure you hit the thumbs up button on your way out. Also, if you guys need prop firm evaluations, last day to get those Apex 80% off, use code DANTHONY. With that being said, we had CPI come in today and numbers were good. Inflation's down 2.8 versus the expected 2.9. Market put in a little bit of a pop and then kind of sold off and then kind of grinded higher and really didn't do anything today. And if you look at this daily chart, we are absolutely pinned below our 5 simple moving average. So I like to look at the 5-day simple moving average as my gauge, right? This is definitely your power trend in order for us to see a dead cat bounce, right? Because at this point, we're a long ways away from talking about, hey, the bottom is in and we're going to go ahead and V-shape recovery and make all-time highs, right? I don't think any of us are, expecting that, right? We're not going to come into the markets next week and see the market trading way up here. It could happen, but it's probably unlikely. I still think we see lower prices again, and I'm not a bear. I'm a day trader. I'm a scalper. I'll trade long. I'll trade short. But I want to make sure that I'm on the right side of my trades. So I keep a realistic mindset. And pretty much with the realistic mindset that I have is I'm not going to allow what I think can happen and what I hope to happen dictate where I'm putting my money and where I'm trading. Now, on a day in and day out basis, I am day trading. I do have a long-term portfolio. So of course I want things to naturally go up. I am looking to dollar cost average. I have dollar cost averaged at the 200-day moving average or 200 SMA. And I'm going to look to dollar cost average a little bit lower as well. Ultimately, if I kind of zoom out here, oh, I took it off the screen. I'll show you guys on the weekly chart. But if we look at what's going on here, getting rejected today once, twice, 3 times. Intraday, we got rejected at yesterday's high wick. Okay. We broke above it. We sold off. Then we came grinding higher. We got rejected at the 5 SMA. Then we came once more and we got rejected at the 5 SMA. This is still not signaling a dead cat bounce yet. Okay. And in fact, if we get a gap up tomorrow where let's say we do open up at today's high, okay, I would be very, very careful going long into that supply because they could fade you for a move down. And the reason why I say that is we're getting very wicky on any one of these quote unquote bounces. Now, in order for us to see a dead cat bounce, which I desperately think that the market needs to do, we're going to need to close, not wick, but close over the 5 SMA. And we're going to need to close over a prior day's channel. Okay. So until we close over a prior day's channel, it's going to be very difficult to gauge where this first leg is going to stop. Now, some people might think, well, we had a green day here and we had a green day here. Wouldn't this be a leg? And isn't this the second leg? No. We haven't had any legs besides one to the downside. Okay. So this is all one big leg. And the reason why it's one big leg is because, like stated, we have not taken out a prior day's channel. We have not gotten over that 5 SMA. We haven't had, a 2 or 3 day relief rally where we've tested upper areas, which were previously support and now going to act as resistance. We haven't done that yet. Okay. We can barely get over the 5 SMA and we still can't get over the 5 SMA. Now, I think that a dead cat bounce is near. Maybe this week into early next week, you see a little bit of a rally and you see that rally maybe get into 20,000 or 20,100 or 20,300. Ultimately, I would like to see us reclaim the 200 SMA, because if we can reclaim the 200 SMA, then we could start looking at this low as maybe a potential bottom if once we pull back, we put in a higher low and we consolidate again for at least 2, 3, 4 days. Okay. And if we can do that and start to push back up and get over this dead cat bounce swing high, then maybe we can be on the road to recovery. Now, what I think is going to happen, and what I want to be prepared for both sides. So that's my bullish thesis. Here's the bearish thesis. That we put in a little bit of a dead cat bounce. We get into this 20,000 range, let's call it 20,000 to 20,300 range. And we make an attempt to get over the 200-day moving average, and then we wick back down. And when we wick back down, we put in a lower high, and then we really start to capitulate and start to put in that second leg down. Ultimately, that would be your first leg down, okay, dead cat bounce, second leg down, and then I think the real rally will come from down there. So I would imagine we're probably about halfway through this. So if you look at the daily chart, we've been accumulating, okay, we've been consolidating, we've been, let's say, in a period of distribution on the daily chart for the better half of 2.5, almost 3 months. Now we've gotten the breakdown. Now we need to see the back test back into this range. And again, we could see it all the way here, right, to these prior areas that were acting as support, okay? Prior areas acting as support until we finally broke down. We could see that dead cat bounce, and that dead cat bounce can come in 2 or 3 days. That dead cat bounce can be the course of, a week to 2 weeks or so forth. But ultimately, once we put in this dead cat bounce, we need to see if we're going to continue to roll over, okay? That's what we need to see. And if we don't, then I want to see that higher low get put in, and I want to see us start to reclaim the 50 SMA. That's where I'm at with things. Again, market is still very weak. Don't get too excited. I understand that it's very easy to get excited as soon as you see a little bit of green or you start to, think, that's it, selling's over, okay? Selling's not over. Let's let the charts tell us when the selling is over. The selling will not be over until we restart reclaiming areas of supply. We have not done that yet. We have not reclaimed any area of supply, let alone we haven't even taken out a prior's day channel yet. Okay, so there's still a tremendous amount of pressure down. Every time you pop, you get sold off. Even when the rally intraday is lasting an hour, hour and a half, it gets sold off, guys. So be careful. You're getting very close to being able to capitalize on those bounces a little bit more and more, but we need to see the charts prove us something. It's got to prove something to us, because right now what I'm looking at is I could look at maybe 100 to 200 point gap up that gets faded off the top of the hour and then loses the prior day low, and then here we go when we're selling off again. So that's not what we want to see. We want to see 2, 3, 4, 5 days pushing higher, and I want to start targeting 20,000 all the way up to 20,300. I want to target this range. Okay, again, if you want to swing trade something, you can use definitely this low as a stop, and you can swing this into these supplies and kind of take some profit. So if you want to hedge your position a little bit, maybe you're holding positions that are down, your portfolio is down, you can definitely try that hedge to make up some quick cash flow. So that way, if we do put in a new low, you can dollar cost average down at a better price. Hope you guys enjoy the video. If you guys want to trade with me each and every single day live, make sure to join the Discord. Make sure to get access to the courses. That link is down in the description box below. Leave me a thumbs up. Also, guys, if you need those Apex evaluations, use code DANTHONY for 80% off. I will see all of you guys on the next video.